one of the biggest risks that I think we can make, and many people do make when they invest, is not to diversify enough. If you think about how it is when if your strategy is to be an asset allocator and put money into a couple of buckets, why not do it completely internationally? So you divide your money into as many areas and regions and sectors as you can, and also as many kinds of investments as you can, because that will just make your return profile much smoother and the risk of big losses much smaller. But it also goes when you are an active investor. So if you are on hunt for value investments, or you are an active technical trader, it's also good to diversify. I'll say there's a reason not to do that, and that is you say I cannot actively analyze that much, so I had to focus on a few areas that I understand really well, and that's a good reason. But if you can diversify it more and more over time, so you learn to tackle more and more areas and markets, you find that every morning you just have a much bigger spectrum of investment opportunities to look at, and the bigger the spectrum of opportunities you look at, the easier it is to select the ones that look really promising. And so if you look at 100, there might be one or two that look really promising, but if you only look at 2, you might end up investing too much in the same things, even when they're not that promising. If you would like more ideas about how to become a better investor, I suggest you buy my book, The Psychology of Finance.